Welcome back, ladies and gentlemen. Now we're going to look at how do we actually do the journals and the accounting for these things called financial assets. We're only going to deal with one type because that's all that's in your syllabus actually, and that's in very long fancy terms. They are classified as financial assets subsequently measured at fair value through profit or loss. Now there's a couple of other types. Remember we said amortized cost. None of that is in your syllabus for FAC1. So let's go. Let's do an actual illustration and work with some numbers. So let's say you purchase 1,000 shares in Tabaldi Limited, a company listed on the stock exchange. And we paid 15 Rand per share and you paid in cash. Assume that the brokerage fees were 10%. So whenever you buy or sell shares, you're going to pay a brokerage fee to your stockbroker. Your intention over here is to sell the assets or sell the shares in the short term to make profits. We call that a speculative intention. So we'll call this held for trading, right? How would we account for this purchase of the investment and the brokerage fee in the journal? So let's go and do this step by step. I'll do it slowly with you. Day one, we need to account for the investment in the actual shares. Remember, this is 1,000 shares times 15 Rand gives us 15,000 Rand. And there we're going to go debit, do this with me please, debit investment, and we're going to go investment in shares. I'm going to run out of space, so I'm going to have to use a bit of shorthand. You may not. Okay, I'm going to debit investments in shares, and that is for 15,000. And that is, ladies and gentlemen, what we call a statement of financial position account. That's an asset that's going in these statements of financial position, right? The other side, well, that was paid for with cash and cash equivalents, so bank. Okay, that as well is a statement of financial position account. Now you'll see in your study guides, I don't necessarily do the SFP. I like to do that because it will be required in second and third year. And we then credit bank. We make bank smaller. Remember, these are journals, right? Not T accounts. These will get posted to T accounts and the ledger. Okay, so that's debit investment in shares, credit bank. You should know how to do a basic journal from FAC 1502. Then the transaction costs, the brokerage fee. Now you'll see with most financial assets, funny enough, you land up adding this to the value of the asset. But when it is a financial asset that is speculative in nature and it's classified as fair value through profit or loss, you will always expense it. So you will go debit, investment expense, and I'm going to map this to profit or loss. Okay, it's an expense. So I debit the expense, and what's going to happen? The other side is going to be a credit to bank, which is a asset, a statement of financial position account. Okay, and that is going to be the 15,000 times 10% gives me 1,500. Nice and straightforward. I am debiting on the left, crediting on the right. Okay, so the second one, I'm debiting the expense and I'm crediting bank, the asset. I make the asset smaller. Okay, so that's our day one initial journals done and dusted. Often you will see that UNISA specifically will combine these two journals, and that's fine. All you're going to do is have bank at a combined amount. The other two debits will stay independent. Okay, moving on, let's now go and say some information relating to year end, or what I often call the reporting date. At your reporting date, the share price has increased to 25 Rand per share. So guess what, ladies and gentlemen, you will need to increase the value of your investment. The theory here is, remember, the change in fair value will either be debited or credited to the asset, okay, which means it'll either debit increase, credit decrease. Okay, but where does the other side of the journal go to when you do this fair value adjustment? Okay, if it's measured subsequently at fair value through profit and loss, as is the case for all of your financial assets, then you will take it to profit or loss. So let's do this. Go and revalue to 25 Rand. First things first, we need to remember that we had a 1,500 Rand expense. Let's quickly jump back, see if you remember. We had a 1,500 Rand expense. We need to close that off to the profit or loss account. Okay, so what am I going to do? I'm going to go debit profit or loss account. That's just a clearing account. I'm not going to mark that off. And then I'm going to go debit the investment expense. Okay, and that was 1,500. Please don't forget to do that. You know, most of the time, if you're in accounting already in the real world, your bookkeeping system does that journal for you. But we're trying to teach you to think the whole process through, same as UNISA. Okay, then we have to do this revaluation gain, right? And this revaluation gain says that we now need to value these shares at 25 Rand a share times 1,000 gives me 25,000 Rand. Our financial assets at year end must show 25,000 as a balance. The previous balance on day one that was recognized was 15. So I must therefore increase the asset by 10,000. How do I increase an asset? I'm going to go and debit the asset. So I'm going to debit investment in shares. Okay, with the 10,000. Remember, left-hand side is debit, right-hand side is credit for these journals. And the other side, well, I've told you it's going to go through profit or loss. And all I'm going to do here is I'm going to call this a fair value gain. Okay, in profit or loss. Remember, the investment was a statement of financial position account. 10,000. Okay, so that's the theory. If it had gone down in value, well then this would have just been the other way around if it had decreased in value. But it didn't, it went up. Okay, with the difference between 15 to 25. Okay, last up, we need to now take this fair value gain that was in profit or loss and put that into our profit or loss account to close out the fair value gain. Okay, so we credited it, so it was a profit, so now I will debit the fair value gain. And I will credit my profit or loss account. Okay, with the 10,000. Okay, so those journals are going to be the same every time. The only thing it could change is we could have a decrease in the asset instead of an increase. There you need to apply your mind. Next up, I'm going to look at exercise 1.1, specifically part M. It's a very similar example to this. So I need you to, after this video, take out a pen and paper, open up your TUT letter, work through that example, do it properly, please. Don't check the answer, don't wait for me to come and look at it with you. Do it yourself, then put it away, pick up a red pen, and then come watch the video with me to go through the solution. Thank you.